and it's somewhere around this window, and I don't know where this window is. Could we have another puke? Pretty likely. The 60-month exponential moving average on Bitcoin is about 23,000, 22,500. Could we get there? Possibly. My first crypto winter was 2014. So I was in 13. I rode it all the way down 82% and all the way back up again into 2018. It feels much worse now because the number of participants in it is much broader. Everybody's angry. Everybody's fed up. Everybody's miserable losing money. But if you zoom out, ETH is back to where it was a year ago. So, but it feels a lot worse than it did then. It's weird. It just feels miserable. Probably going faster into recession than anybody expects, and probably much deeper. I think that's coming. I think we've got a replay of 1974 underway, which was the ISM the Institute of Supply Managers Survey, which is a good guide to the business cycle, went from 56 to 30 in 4 months. Similar setup with oil prices screaming higher, supply restrictions, rates going up, the Fed hiking, all of the same stuff. And there's several of these in history. Equities don't like it generally. The bond market tends to turn earlier, which I've been waiting, and bonds have started rallying to say, you know what, things have gone too far. I still think we probably have another leg lower in equities into the final low, much like we had in 2018 as well. So I'm not short equities. I've been buying bonds, and I've been buying kind of growth equities, all the stuff that's super beaten up, because I think that the cycle plays out faster than people imagine, and the outcome is a U-turn by the Fed. This chart is rate of change of mortgage rates, 2-year rates, oil, gasoline, and the dollar.
Yeah, this is a good one.
Over the business cycle, it's suggesting we've just had the largest monetary tightening in history.
Yeah,
and that what they've done, the markets have done, because the Fed were barely involved. Yes, you're right, they're jawbone, but what they've done is cemented in the KK precipitous drop. As I said, that the last time we saw something like this was 1974, and it was over pretty quick. Now, it depends whether it's a quick thing or a longer thing. I think it's a quick thing. So as soon as the ISM approaches 50, they stop, because obviously below that you start seeing unemployment rising, other bits and pieces. So my guess is we get an ISM print of around 52 below consensus, and then by July it's below 50, and so they're done. That's my view. I think it's done, because I've been saying that the increasing fixed costs, commodity prices, PPI, all of that stuff was going to destroy consumption, demand destruction. The dollar was always a problem because it went up quite fast at a rapid rate of change, and rates have gone up. 2-year rates and 1-year rates have gone up at the fastest rate of change in all of history. 1-year rates in the US have gone up 800%. And
wow.
People say, well, that doesn't matter because the rates are low. I was speaking to a good friend of mine last night, big family office, multi-billion-dollar family office. And he's like, oh yeah, we refinanced everything. And I'm seeing it with all my friends. Everybody who's refinanced their stuff is now seeing massive interest payment increases. It's the rise in the oil price, which is a tightening of conditions, the rise in gasoline, the rise in mortgage rates, the rise of 2-year yields, and the rise in the dollar. Now, the S&P 500 right now is pricing in an ISM of around 47, around recession level. It kind of suggests that it might need to come a bit lower, but it's against a good comp from next year, so it'll come lower anyway. So the year-on-year rate of change versus the ISM. So I don't know when this turns up, but as yields are turning now, oil, I think, breaks as it did every time we've had this setup. Oil breaks as well, then we're going to find that this chart will start hooking up and we can start looking forward. It feels like all of this is going to play out faster than anybody imagines. I think everybody looks at supply and assumes stable demand. My work suggests demand is going to be weaker, and therefore the price of oil clears at a lower price. That's what I think. But I understand there are real structural supply issues in oil. So, I'm not saying that, structural oil prices should be lower over extended periods. My view is the same. It's the long duration. It's the fear of inflation. and liquidity being restricted. And if you think of it, crypto is a retail market predominantly, and you've just taken everybody's wages have gone up a bit, but prices went up more. So you've got negative real wages. So what that means is if you want to pay for your food and your gas bill, you don't dollar cost average into crypto. It's a pretty simple calculation and it worked pretty consistently. So we're seeing that it's a long duration asset and it's sold off. Now, the question is inflation beaten? i.e. is the rate of change going to come down? If it is, rates will come down, crypto will go up. And it's somewhere around this window, and I don't know where this window is. Could we have another puke? Pretty likely. The 60-month exponential moving average on Bitcoin is about 23,000, 22,500. Could we get there? Possibly. What does that mean for ETH? I don't know. Below 15,000? Possible. 1,500? Possible. But in the end, the macro is the driver of some of this. There's nothing else going on. There's no real negative news in the space. But what I'm also seeing is peak fear sentiment. How can I model network effects in a reasonable way? And I did a lot of work on it, and I found it was the two things together explained pretty much everything. It was the value exchanged, let's say on a weekly basis or monthly basis, you choose it, in dollar terms, multiplied by the number of active users. Now, the number output is not important. Just put it against the price. It's identical to price, and it doesn't have price in it. So it's telling us that the market is pretty efficient at pricing the network. Now, what you're saying is the network growth is the thing we're trying to estimate, right? Because then you've got the real value add. If you can forecast network growth, then you can basically forecast price. But I figured out how to forecast how to value price. Market's bloody good at doing it. The only one that's traded somewhat differently, and it's too early to say, was ETH. It traded at a premium to that, and I think it's to do with the burning mechanism that meant that we've got a slightly different supply structure. So I would probably have to model that out, but I'm not smart enough, but I'll figure out how to do it at some point. But it was the value. So if you think of Bitcoin exchanges more value each week than Ethereum does. Ethereum has a lot of transactions. It's a red herring. Transactions are a red herring. It's total value and number of active wallets, and Bitcoin beats both. However, if you look at Ethereum, the change in values, the rate of change in those two values in Ethereum is higher, which is why Ethereum's been outperforming Bitcoin over the last couple of years. And I found it's really useful. Listen, if you believe the future is in the technology, in blockchain technology, whole digital asset space should outperform the safe haven. That's just how things work. It always works that way. And therefore,
there's a higher beta.
There's a higher beta. And if you're in an exponential uptrend, because you're in a network adoption model for the entire space, not just for Bitcoin, then it should outperform over time. It's as simple as that. It's not a value statement about, I don't like Bitcoin because X and I prefer Ethereum for Y. It's all about network adoption models. Once you understand that, you free your mind of all of the narratives that are in the different buckets. Yeah. It's higher beta plus the network growth, right? Because there's a lot of high beta altcoins that have no network, which is why they keep failing. You need to find the ones that actually have network. And that's the key thing here. How I looked at that is my core position is mainly ETH. I moved from Bitcoin to ETH, but either way, and I just had a basket equally weighted of other stuff to be involved. So it's a small weighting. I think it was like 15% of my overall position, equally weighted. And you use it as a VC model, which is, okay, we'll see. And then, okay, sure, if something big comes out of it and you can change your weightings over time because you have more confidence in that particular thing, it works. But, you would never bet 100% of your net worth on WeWork, and before you know it, something goes wrong.